All right, we're gonna try to go on Facebook here. All right. We're gonna start streaming. We're good. We're good. We're good. Thank you. Ladies and gentlemen, the spiders, double top. Did you already see it and what you could expect next? Look does not mean touch, not only in museums, but especially in the stock market. Why you will probably not be a trader anymore because the number one problem affecting everyone, I did not invent a drug for it, but I will make you aware of it and how you can prevent it in the future. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. Okay, so many interesting things here today to talk about. By watching the show, you are agreeing to hold me, Mark Melnick, and T3 Live harmless and not responsible for anything. If you do not agree to those terms, leave. If you do agree to those terms, continue watching because you're already agreeing to it. Okay, we're going to go right into the things today. So many things affecting traders. I will show you the number one thing that will statistically be the biggest probability for your demise as a trader. You know, people talk about always this, you buy here, sell here, but nobody really talks about what is going to remove you from the game. So we're going to start off. We're just going to structure it. You could listen to whatever segment of you want of the show that you want. We're going to start off with the spider double top. Very, very simple here. It's kind of funny when you draw these algorithmic lines and in the S&P 500 and the spiders, you might be sitting there saying, wow, Mark is sitting there saying, there's a double top today. And I generally don't like the term because in my back testing, I found no statistical probability that double tops were accurate, even within a 1% margin of error. Translated into this English language that I am speaking here just for tonight. Tomorrow it could be in Cantonese, the next day Spanish, possibly French, and possibly a language you've never heard of. With that being said, there is no statistical or empirical evidence showing that double tops happen even within a 1% range. So if you're dealing, for example, I'm saying the spiders double top, just for example. So 1% of the spiders would be about $3. So I've never seen statistical probabilities. However, for everybody who wants to make fun of the accurate and algorithmic way to draw trend lines here, we're able to call the market with all this mumbo jumbo you see on your screen. So before you're looking and saying that you're getting a migraine, before you're looking and saying that you need a couple Advil when you take a look at these charts, just stop and slow down for a second and actually look what's happening. I think you'll be kind of impressed with what this could potentially lead to when it comes to real technical analysis, which is based on where the robots go, as opposed to everything else you see out there. Because you see, a day like yesterday, we could come to you and give you $296.80 as a potential top of the spiders. And this was, of course, from yesterday's Newsbeat show. And again, members of the room get it as well. Emailed, portal, tweeted, etc. And you might look today and see that's 296.92. So I need to show you what it looks like. I just really need to show you what it looks like here when you're probably forming a double top. The fact that you came back so quickly to the line means it's more likely to break this time around. It did. It ended up busting through our resistance level by 12 pennies before collapsing, going all the way back to day lows at 294.33 before bouncing still down on the day. So by using these silly trend lines, you could call the top of the market. That is how we called the. I'm surprised. I'm surprised T3 wasn't emailing videos on Newsbeat show. What was it, 364, where we called the top of GLD, the spiders, and Bitcoin moments before they happened in all three cases. I know that nobody is 100% right, but I want you to know it's not a coincidence that I was able to do that. And using that same trend line that I gave you that in shows me that the spiders could be in for another double top. Now, last time I called a double top here in the S&P 500 slash spiders, whatever you want to call them. They're actually a little different. It was the S&P 500. This time more of the spiders, but the spiders aren't going to go down while the S&P goes up. Let's just put it that way. Um, right over here, you could see after we gave you the top right there on June 20th, you see that we fell here as well. And of course, that was the S&P 500 top that we gave you here with the target of the exponential 8. I don't see any reason why the spiders aren't going to grind back and break the exponential 8 moving average to the downside. Currently, it's at 292.70. That's 3 points away. How long does this last, Mark? As I told you before, when we called the dead bottom of the market, and I have to point this out because we are the only live public video on Wall Street that has it timed in the way we do a day before. No video on Wall Street I have seen, and we've looked at the internets, exist based on this bottom. So right over here, we were giving you the bottom of the triple Qs on Monday's close. Right here on Sunday night, as the futures were gapped down, we said we're buying on Monday night right here. So we were buying all the way at the dead bottom. Then we gave you the dead top of the S&P 500 on June 20th, where you had your largest down move since we called that bottom. And now I'm coming again with it, and I know just because I was right before doesn't mean I'll be right this time, but at least I'm putting my butt on the line where I'm actually sharing with you something that I believe can happen. So I think the next move for the spiders is the exponential 8. I'll be the first one to tell you I believe in giving you tier 1 information. Some people will give you tier 2 information, which is not as valuable, such as, well, the spiders are going to go down to $250, they'll tell you. And how long? And then they're like, oh, I don't know. I didn't want to give you a time frame. I'm pretty much saying the short term top is already in right now after today. And again, if you were in the Newsbeat live room or you were watching our levels from watching the other day's show, you would know that 296.80 happened to be the spider resistance. Now I'm going to teach you what it means. Look does not mean touch, not only in museums, but also in the stock market. And do you ever realize there's that trader who keeps going and increases risk as they win? Do you know somebody like that? Have you ever been in a casino? And let's say you came with $500. And let's say you changed it to $3,000. Does your bet size increase and do you continue gambling? I am going to show you the number one reason now. So if you just wanted to hear for a potential phenomenally accurate top call in the spiders, right or wrong, I'm putting myself out there and calling the top. At this point, if you want to know what's likely to blow you up, I'm going to go through that. And if that's all you wanted to know with the spider information, you could leave. If you want to know tomorrow's algo levels, you would have to stay. So here, that's sort of me working with you there. With that being said, look does not mean touch. And I will tell you, why is nobody talking about this out there? The number one reason why traders lose is rarely a death by a thousand paper cuts. The death by a thousand paper cuts is basically utilizing a strategy which is very inconsistent, even though mathematically it looked nice on paper. Without a certain win rate, it doesn't matter if you risk one to make two or risk two to make four. It's always risk one. You realize that though? They'll never tell you to risk more than one. It's always risk one to make two, risk one to make three, four, five. And it sounds great because you just need to win one time for every X amount you lose, and you're going to come out ahead. And everybody tells you that. But you want to know the funny thing about people who die the death of a thousand paper cuts? They tend to have a blowout day. They tend to have one day that is way, way, way more than their biggest up day multiplied by a number. How many people right now, if you're watching in the room, raise your hand if your biggest loss happens to be, your biggest loss happens to be significantly larger than your biggest win. Funny. Not that it's funny that you would lose. Funny that I'm no longer in that situation, but I was. And I was still a profitable trader, even with a big blowout. I remember I don't want to go all the way back to 2000 because trading was just so stupidly easy back then. But I remember days where I'd have like, $35,000 down day, and my best days would be like 10 to 15,000. So it's happened to me in the past. It doesn't happen to now. It's the exact opposite. My biggest up days are exponentially larger than my biggest down days. But how was that change? How did it shift? Because traders who will continue to have that is something. See, the cool thing about what I try to bring you here is that the majority of these prop firms and the majority of these brokerages, the traders who blow out their account tend to escalate like a snowball. If you actually look at your results, you might be what I call a snowball trader. And a snowball trader basically means it's like taking a snowflake and ticking it down a huge slope, and the snowball just gets bigger and bigger and bigger and bigger. And that size is how much money you're risking and willing to lose per trade. So in the beginning, when you first open your account, you are phenomenally meticulous. I'm only going to do this. You had a plan. I'm going to do this. I'm going to be light here, light here, light here. But then as your account went from 100 grand to 90 grand to 80 grand to 70 grand, all of a sudden you increased risk. You had to. You were more experienced, and you have to make back the money you lost. You have to make back the money you lost. And what it does is it creates this vicious cycle where looking at the records, when I was looking at these prop records, again, I have found that all the traders who blew out of the prop business, which was 98.8% of them, blew out. And when I mean blow out, in actuality, about 92% of them stayed. Excuse me, 92% blew out, but 8% of them stayed, even though only 1.2% were making money, because you had a large number of people who kept refilling and sending in checks, even though their P&Ls would go down. They'd go down, they'd send in a check, would go down, they'd send in a check. You have those people. So about 8% after a year of people who open up these prop accounts are still around. And I was sticking around thinking to myself, how can I help the prop trader? It is such a phenomenal dream. You come in with a little bit amount of money, they give you a lot of buying power. What is mathematically taking these traders down? And when it comes to the pure trading aspect and not just the fees and the commission structure, which makes it almost impossible for a trader coming in with a low sum of money, because I mean, just to do the math, if you're coming in with like $5,000 and your monthly fees are $300, you're risking 5% of your account a month. If you were a money manager making 5%, more than 5%, I know, I could do the math. But could you imagine 6% of your account per month? Could you imagine if you're a money manager making 5% of your money a month? You'd be lauded as the world's greatest hedge fund manager if you produced any record that showed 3 or more years. You produced 10 or more years, you would be the indisputable best money manager on Wall Street. Major money manager. Now, we're not talking bringing 100,000 into 1.5 million. We're not talking like that. We're talking like consistent returns like that. 6%, 5% a month, you would be the best. Yet, when you have traders who are coming in with this prop money, they have to perform that way in order to survive. But that's also the beauty of day trading, because beauty of day trading allows for larger percent returns. You're talking to a success story. You're talking to somebody who turned 25,000 into over a million in options in a year. You're talking to somebody who started off trading in 99 with 12,500, went to 1.1 million plus also within a year. I mean, I've seen it done as a trader. So when it comes to trading, the interesting part is it actually is not that crazy to think that you can make 5% of your money with an account that size, especially with the buying power, especially if you're doing everything right. And then I see the education that prop firms generally offer, and it is subpar. What do I mean by subpar? There'll always be, what I've realized is somebody who's offered training for 12 years, you'll always have somebody who loves your educational course. Always. Why? Because they'll take your course, they'll apply it to a random array of names, and if you're telling anybody to buy or sell a security based on anything, there's a coin flip or worse or coin flip or slightly better chance that the trade will work. And then they will actually credit the course of what caused this turnaround in their life. But what they've realized is they can't do it. That was just one day, and then next week they're just blowing out and they have no idea what's going on. They were confused. You see, the funny thing about trading is anybody could look at any stock in any day and talk about how amazing it is and what a gift today to have this. But the truth is, those people are likely going to blow out themselves. The traders who could look at a name in hindsight and say, we should have been trading this one today. How many of you guys ever look at a random stock that was not on your radar till later and said, we should have been trading this name today? How many people actually look at names and do that still? I used to. I don't, but I'm raising my hand as a at least an ex-convict when it comes to something like this. At least an ex-criminal for the point. And what a lot of these services will do is they'll do what I call a flood effect, and they'll flood you 10, 20, 30 names, and most likely one or two or three of those names are going to have like a really nice move while the rest of them suck. And you'll be sitting there wondering why you didn't trade ABC, which was so much better than XYZ. I find that absolutely hilarious. So what is the solution here? How do you now I'm going to actually tell you if you stuck around this long, you're probably not the sub and I show actually the percentage of trolls that watch these videos in the description of this video. We will show the number of trolls updated as a different number every single episode who watch these videos. It's sort of a joke, but also sort of amazing at the same time. With that being said, how do you stop blowing up? Because in an environment like this, shame on every broadcaster. Shame on them. Heck, shame on me many years ago when I didn't do this as a broadcaster. Shame on me. I'm not coming from a position of, snobbiness. I'm coming from a position of I'm trying to help you because I've screwed up so many times along the way as a trader in the last 20 years. So many times. Even though I was making money, but as a broadcaster, it goes beyond the money you make. As a broadcaster, you need to help as many people as humanly possible. And on a market like this, if you're not telling people to slow down, I mean, just to give you a glimpse of what this market looks like. Last week, the spiders had a $4.50 range. Compare that over here where it had a $15 range and over here where it had a $7 range. You think it's a coincidence that I made most of my money this week on June 7th? My second best money in June on this week right over here. My lightest weeks over here. Do you find that funny how that works? So in an environment like this, people should be telling you to slow down. And if you are a new, or I don't even want to say new trader because honestly, it took me so many years to figure that out. So many years. I was not early to that punch. But just reflecting back, I have experience. One of the biggest things of growing as a trader, growing in my case as a broadcaster and a trader, one of these things that I tried to grow from is the knowledge of what I was doing wrong before and what I'm doing to fix it now. If you could see something that you were doing incorrect before and you could look at yourself with an unbiased eye and say, I could have done this better, and you strive to do better, you will be doing wonders for the people who follow you. Try being honest with them. Just try. Like they come in the morning and say, Yeah, there'll always be a stock or two or three or four that moves on any given day. And yes, you could have longed that one or shorted that one. Look at any stock with a big move, and you could be like, oh, I could have longed it or went short it. Yeah, you maybe you could have, but this is an environment where you are hands off. And if anybody else is telling you that, oh, by the way, did you know we're trading 3.5 days this week? I don't know if you are aware that this is a 3.5 day week. Wednesday's a half day, Thursday you're off for July 4th. Volume tends to be tapered off. The volume today is an anomaly based on the G20. We would never get volume like this today on any other July 4th. We would not get volume like that simply because, and I just want to show you before the Monday that started July 4th last year was 63.5 million, and today 79 million. And most of that was because we gapped up big and then the market just died off all day. There wasn't a lot of things going on. Now let me tell you how this entwines into a double top in the spiders. Algorithmically, every time these trend lines hit, there's a volume spike in the spiders. Option traders who enjoy taking advantage of implied volatility increasing within their option value love me because I predict with astonishing accuracy where volume spikes can and cannot occur in the market. At certain levels, I know right over there, if that level hits, the volume is going to spike. And it could seem like a random level to you, and the volume just always does it. That's one way to take advantage of the market. Another thing is the low volume is likely to insinuate a move lower. When you're right up against ascending resistance, you need increased volume to hold up. Look at our rules of algorithmic trend lines. It works every time if you did it correctly. All the lines you see on these charts will work like that. They will increase in volume massively as our levels hit. That is how we call the top of gold, Bitcoin, and the S&P. I'll prove it to you. I'll prove it to you. And then, of course, you'll have Captain Hindsight's telling you that, oh, yeah, this is where it spiked up, and, gold went psychotic. And they'll give you like a really nice SAT word like that, like psychotic. Gold went parabolic. Basically, if they give you a word that ends in IC, they are full of manure. If you got a word describing that moment that ended in IC, it's full of manure. I've seen parabolic, I've seen psychotic. If it ends in IC, you're full of doo doo. And you're talking about it after the fact. But right over here, you see that gold topped out on Tuesday. We were calling it on Monday's show. Look at the June 24th Newsbeat show. As the gold futures were gapped up, we were calling the top in gold. The S&P 500, we were giving it to you Thursday night. Watch the June 20th Newsbeat show. We're on the top of the playlist at T3. Just look. Scroll to the right and just find it. It's there. We called the dead top of the S&P 500 with a target of breaking the exponential 8. Boom. Not only that, we gave you Bitcoin. Now, what you'll notice about these calls is coincidentally, the S&P 500 exploded in volume the day before you said it. What a coincidence, Mark. Gold had its highest volume day, what, this year? The day before you said it was topping out? Oh my God, what a coincidence. And it happened in the S&P 500 too? Wow, it exploded in volume right here the day before you called it topping out. It just all timed perfectly. That is parabolic, guys. Let me talk about it going parabolic the next day because I have a reason of why that happened. Does that sound like anyone you know? Or how about Bitcoin? I'm explaining how stupid these people sound. I'm explaining to you how you can predict these things happening before they happen. And it's not a crystal ball, it's not miraculous. And right over here, the night before, right over there, we gave you the dead top of Bitcoin in the Newsbeat live room in real time. We gave you 13.45. We said let it break above 13.45, and anything above there is a short. That same day we gave it to you, just coincidentally, was one of, if not the not the largest, one of the largest volume days ever in Bitcoin. Now, do you find that funny the day before we call something topping out that they they had parabolic volume, they had cyclonic volume, it had titanic volume? Yeah, not only it did, but it was predictable the day before. Volume, because robots dominate the market, volume is predictable. The majority of algorithms will use certain parameters within the market, and we have infinite amounts of evidence that our trend lines accurately predict these things with a high, nothing's 100%, with an extremely high hit rate. Just like when we gave you 376.03 and Netflix yesterday on the show as a top, it at 376.66 and couldn't break through. Now, again, some situations require that you try this trade, some situations will require that you ignore it. Once you understand to take beyond the chart as well and look at other factors, the markets, the sectors, what's happening, you will be on the road to consistency. Now, is it that difficult? Do you have to do all these things? I like the simplicity, you might be saying, Mr. Melnick. I like I like the simplicity. I like this methodology which works for me and I do really well, but I'll still have those blowout days. I'll still have the minus whatever your blowout day is, 1, 2, 5, 10, 20, 50, 100, 500 million, 5 million, $10 million down day. And you'll have that day and you'll sit there and you'll say, what on earth? Why was I so stupid? Why? And you'll sit there and you'll blame yourself. But I want to tell you that it's not really fully your fault. Partially because you push the buttons, but the strategies you're doing will encourage a psychological breakdown. I find it hard to believe that the NASA engineer, the NASA engineer in the Newsbeat live room, I find it hard to believe that the pilot, the military, the policemen and firefighters and EMTs and doctors in the room. I have a really difficult time thinking that they just are all coincidentally undisciplined. I know that the strategies you're doing is encouraging you to finally break. And I don't care if you're thick as a rock or thick as an egg. If you take a hammer and you keep hitting it, eventually it will crack. And that is what you are doing to yourself. So, how do you prevent this? Now that I explained it to you, how do you actually avoid it? Mark, don't tell me to read a stupid psychology book. Don't tell me to sit and listen to a shrink. Don't tell me to do these things. Don't tell me to do. I want a real answer that's going to fix me. Not read this person's book that helps if 1 or 2% of people out there and hurts the other 98 or 99. No, not a stupid book, not a stupid course. Just tell me, Mark. I need to know what to do. Okay. You have to realize that trading is about more being, just to use the military analogy, more about being a sniper than, the person on the front lines firing cannons at the enemy. You have to realize that trading is about finding out what works for you ahead of time. Now, a lot of traders out there might be sitting there, Mark, how do I know what works for me? And I will tell you again, a trader whose account went from 100,000 to 20,000 didn't have 80,000 in losses. The trader who went from 100 to 20 didn't just lose 80,000. That trader probably has 150,000 in losses and like 70,000 in wins. And you might say, that's interesting. So you don't always lose. If you always lost as a trader, believe me, you would be one of the most, you would be the wealthiest person on the planet if you could always pick a losing situation. I promise you that. I know it feels that way based on your commission rate and the structures and how everything is pegged against you. But if you can actually figure out what you do well, you actually will stop over trading. And if you are somebody who is trading this environment actively, you probably regret it. If you were trading actively last week, like constantly, you probably regret it. And again, there'll always be the one name that somebody will come out and be like, stop kidding yourself, Mark. This is a gift. This is part of the sub 1% trolls. They'll be like, that's a gift on a day like today. That's the same person who couldn't differentiate his back end from a hole in the ground, because that is the same trader who will always look for that opportunity on any day. And when that person is wrong, that person will lose more than they make on the one trade they would have been right on. And that person was me, other than the being a skeptical imbecile. I wasn't that. I was always open to learning, but nobody would explain it to me. Everybody on Wall Street would always fill my head with stuff that I look back on today and say, that's the biggest load of bull that I've ever seen. The way you stop over trading is by finding a strategy that you could apply over and over again consistently. Now, the hard part is everybody out there has a strategy that you could do over and over again. Everybody actually takes care of that. Nobody is coming to you with a strategy saying you can only do this twice, 3, 4, 5, 6, 7, 8, 9, 10, 20 times a year. Nobody comes to you like that. They come to you, this is a bar setup. When you see this, you go long. And it's very nice because ignorance is bliss. It's a very good and confident feeling for a trader to look at a chart pattern and say, oh yeah, this is where you buy and this is where you sell. And it's very easy to say what you could have done after looking at a chart. I find that I find that funny, who traders who look at charts and talk about what you could have done using their methodology, and maybe it even worked using their methodology, but you're not looking at the 20 other patterns where it failed. So how do you differentiate which stocks you're allowed to choose? Now, most of them will tell you out there, trade whatever you like. They're traders who like to trade everything, and they'll also give you a false sense of confidence because certain technical patterns are better on certain names than others. And if you're just in trading to simplify everything, I think simplicity is beautiful, but I think there has to come to a point where simplicity is becomes synonymous with stupidity. And if you cannot agree to that, and you think these charts, if you think these 5 minute bull flags that I love, and these 5 minute bear flags, and which I love, if you think that they're created equal on any day and you have the same chance of just having it go up or down on any day, you are so beyond mistaken. There are cycles in the market where certain strategies are practically, in terms of trading profitability, infinitely more effective on certain months as opposed to other months, as opposed to other quarters, as opposed to other things. If people really say the market is a living, breathing thing, is what they say, are you the same person every day? Do you eat the same thing every day? You might have a routine, a routine you try to do every day, but do you do the same thing every day? Every single day. I mean, from A to Z, everything. I mean, we do the same thing every day. We turn on our computers, we look, we make our coffee. That's not what I'm talking about. Do you do the same exact thing every day? If you saw a movie on a Wednesday, are you going to be seeing it every Wednesday this year? If you went out to a birthday on a Friday, or do you have a birthday party to go to every Friday? Of course not. Because life changes, ladies and gentlemen, so does the market. So what I did was I created algorithmic statistical strategies that can help the majority of people if you know which ones are good for you. Now, how would I know which one of your strategies are good for me, Mr. Melnick? That sounds almost like all the other trading rooms out there where they vomit 20 names and ask you to pick one or two or three to trade. And if you pick the right one, hooray! And if you didn't, aw. Like you have the whole audience. It's like you play Wheel of Fortune, you pull the wheel, it's like, and then it lands on like the silver, the little slim silver 5,000 piece, and the whole crowd, and there's like huge signs saying applause, and the whole crowd is standing up like, whoa, because they know you can hit it big, and then you're like, can I have an M, please? No, sorry, no M. And then you hear, oh. That's what it feels like sometimes. So what I've done was I developed a bridge between John Boyd's OODA loop. He was a fighter pilot who literally talked about situations which helped the US decimate the opposing military airplanes. We were outnumbered, they had way more planes than us, outnumbered, outmanned, and we won that war. And the Army credits John Boyd's OODA loop system for knowing what to do, to how to react, how to move, how to fool the other pilot, how to interpret the other pilot. So what I did was I created an OODA loop from John Boyd and a bridge from John Boyd's OODA loop into trading. And I built that bridge. All I did was build a bridge that should have been built a million years ago. That's it. That's all I did. And that's going to be the Trade the Open Newsbeat course. And what you're going to see in the course, and I'm not even sharing with you a link to sign up, contact T3 if you want. So I'm not promoting it. I'm just telling you the steps of how you are going to likely prevent it. And with this OODA loop thing, I let you literally figure out which one of the algorithmic strategies I do works for you. Because everyone is different. Do you find that funny too? Everyone is in a different situation. Some people are investing long term. Some people don't have time to trade. Yeah, people just bombard you with strategies and say, yeah, go ahead and do it. And they're sitting there in front of their computer all day trading, trading, trading. God knows how many shares on a day like today and praying every single time. And maybe you came out ahead today. A lot of the Newsbeat people did. Maybe you didn't. Maybe you didn't trade today. But either way, if you're taking like a big loss today, something is wrong. And this is a really great time to be enlightened, to understand what exactly is going on over here. What is going on is your brain cannot differentiate the market environment. So that's why when I come in the morning and I basically tell you like the day is going to be dead, like slow down. Like, so this was my message today. This was my message today. Good morning, bandits. Look, guys, it's July 4th weekend. That was kind of, I typoed that. Should have just been like July 4th week. I guess it is the weekend of where July 4th is located after Saturday, whatever. And I know last week was slow. We have a major gap up today based on nothing more than the G20 summit interpretations. Be cool, stay calm. Don't get excited is what I mean by stay calm. And I took it very easy today because today was not the day for me to make $10,000. I would rather be throwing my money. I would rather be throwing my money on a much higher conviction day than a day like today. I would much rather be doing that. I don't need to throw a lot of money right now at this market. I don't need to. It's going to get better. The week of July, we have 3.5 days of trading. We have 70% of the week. And one day went by. We have 2.5 days left of trading. You guys know that, right? I have to get reminded every time. Doing this for 20 years, I still can't remember the market schedule perfectly. I remember some holidays, but perfectly, I always have to look up the schedule. It's crazy. But once you actually discover what you do well as a trader, you will realize that what that person does well and that person likes to swing 100 different things and That person likes to scalp and 100 different names, and that person likes to be active and have a bunch of things on their list that they trade. You're going to realize, the majority of you will realize that it's a big waste of time, and that person, you will never, ever be that person in what that person does as a trader. You will never be that person. You will be your own unique individual. And you know what? That's a good thing, even if you don't make as much money as someone else. The traders I talk to, the majority of traders on Wall Street just want to be consistent, want to make a little more when they're right as opposed to when they lose, and they want to be right the majority of the time. They just want consistency. They just want to treat trading as a full-time job or a part-time job. That's the beautiful thing with what we do here. The majority of the money we make is at the open when the statistical odds are highest. So what we did with these algorithmic strategies, we've noticed that there is a time frame of when they're actually executed with higher conviction. So if a know your limit 21, one of our strategies happens later in the day as opposed to earlier, the odds of it working decrease. So time of day is more important than anything you're looking at on your chart. And people don't get that. I mean, take some traders here, successful traders, 25 of them in our room who are millionaires, a lot of them, not all of them, but a lot of them. And once you get past 11 o'clock a.m. Eastern Standard, these are consistently profitable traders. These traders make money, yet they still make different amounts of money based on the time of day they are trading. And I didn't update April, May, June, July. I know I didn't because I didn't have the time to sit there and like go through all their stats again, but I could promise you it's not going to change a lot. And I've done similar studies to this a couple of years ago, and it always comes out the same. There is a vast differential that the majority of successful traders make money between 9:30 and 10 a.m. So because of that, a lot of our strategies are done between 9:30 and 10 a.m. A lot of strategies also win between 10 and 11. And if we could find statistical strategies that work really well during these times, we can ensure that you are never going to blow up. Well, ensure is a strong word. I can make it as difficult as possible for you to look and not touch. That's what I ultimately do. I try to make it as difficult as possible. You know what it's like? It's like seeing a puffer fish all blown up. It's like nature's way of saying do not touch. It's like seeing a lionfish, with its spines like and its fin completely angled. It's like it's like seeing a lion, and inherently these wildlife have an inherent fear of the lion. Before they even know what the first moon looks like, they're already running away from a lion, perhaps. And it's crazy the way some of these things work. It's kind of crazy the way some of these things work because the market too has a way of saying do not touch. And if anybody is trying to get you involved in a ton of ideas out there, run away from them. Quit now. I don't care how long you've paid them for. Run as far away from that person as possible. If somebody is telling you out there that you know, this is, acting like nothing is different in this trading environment, and they're not making a big deal. Not later in the day. None of this Captain Hindsight bullshit. None of these titanic moves that have happened. None of these psychotic moves that have happened. Not these parabolic moves. You end in IC. It's like IC crazy. That's what IC means when you see somebody use words to define something that already happened with an IC. So there's nothing there's nothing that you should hear more than before the market opens that there's nothing going on. You should be able to know that ahead of time. It's funny because when you actually ask the Newsbeat bandits, Newsbeat members, and I'll ask you right now, because I think it's an important question. When there's a conviction name of like a 3.5 or a 4 or a 5 out of 10, how many people feel a lot differently like before the market opens? Like you're excited, like you're tearing, like you know what to do. It's like everything is clicking in. Like how many of you members out there, when you see a higher conviction idea, all of a sudden you're alert, you're like, okay, I'm going to do this thing right now. How many of you are batting in the room almost 100% on the higher conviction ideas? Almost 100%, if not 100%. Well, you're brand new here, Amy, too, and welcome, and you will see them. We're talking people who have been here. But yes. So here's my point. We know for a fact we're going to get those higher conviction ideas. We don't know when. When a lion is sitting there on the savannah with a pride, starving, they walk around, they look, they conserve energy. They don't sprint after anything or they would die. See, many people don't understand that one of the deadliest things for a lion, one of the deadliest things for a lion is not a hyena. It depends on the situation. If you're in a male or double male pride, you have more of a chance to get attacked by another male or a vigilant male running on. But besides for that, you want to know what the number one killer of these big cats are? Chasing after something and not making a catch. They'll chase after the prey, they'll chase after the gazelle, and they will not make the catch. Their odds of dying afterwards increase substantially. That remains especially true for cheetahs, the fastest land mammal. You know what the cheetah is? The cheetah is like the cowboy trader who always looks for an opportunity and runs full speed at everything. And sometimes they catch something and it feels really good. And another time they'll catch something and catch, and everything is great until the one time they miss and it is beyond anything that they've ever done good. What I am telling you is I will make it as difficult as human. I'm not pressing the buttons on your keyboard, but I will give you as good of a heads up as humanly possible that the market will not be good. I will show you that even though you're walking through the casino floor, the majority of those people are losing money, even if you hear ding, 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 ding. And you know what I'm like? I'm like, hey, don't play these slot machines. Come over to the blackjack table. We're counting cards legally. We're legally counting cards, and they're not changing decks. Come hang out with us at the blackjack table, but that's going to be tonight. I have so many hours. I'm just going to play a game. I'm here for fun. And then I'm leaving. That's fine. There's nothing wrong. I love to play a slot machine here and there. But I don't do it with the intention of making money. I do it for the intention of entertainment. There are people who go to a casino with the intention of winning money. Everybody wants to win money. But if your intention is to go to the casino to come out ahead, like that's the reason why you're going. Nobody wants to lose, but like you're only going on the trip so you can make money. You don't want to do it for like an enjoyable night out or for the fun of it. That's what it feels like, these traders. It feels like you keep chasing that one high, and a lot of times you'll go through withdrawal symptoms. And scientifically, in the financial industry, there was a German study held in Germany that showed that people in the financial industry who were removed from the market, you ready for this? You ready for this one? Experience the same withdrawal effects as heroin addicts. Like heroin addicts. Isn't that insane? They did a study by taking away cell phones, all access to television, electronics where they could see the market, put them on a nature retreat, a natural whatever. And you know what they were thinking about the whole time? Their positions and what they were going to do and what the market was going to do and whether we were gapped up or any news came out on There was no G20 summit they were talking about in the report, but there were similar withdrawal symptoms experienced by people in the, not just traders. I'm sure they trade, but people in the finance industry as heroin addicts when you take away the market from them. And that's when I realized something was up. The same thing goes when you're gambling, by the way. The same mentality goes because you'll keep pulling and pulling for hours and hours and hours and hours, and winning and losing now just becomes a blur. You don't even feel your wins anymore. You don't even feel your losses. Don't worry, let me give you some free alcohol so you even think about it less to numb it even more. And now you're in a situation where you're psychologically numb to everything and nothing bothers you anymore. Doesn't matter if you win, doesn't matter if you lose. Nothing, it just doesn't matter. Now all of a sudden, you wonder why a lot of traders are on substance, whether it's pills, alcohol, marijuana, worse. I don't think anything there was worse than pills, but traders do it. Why? To numb the pain of being a trader. And that's how I realized that something really needs to change. So what this course does is I basically am trying to show you what you can be good at. And I know for a fact you won't be good at everything on that list. And I'm fine with that because the way the course is designed is it's going to teach you what you are good at on that list. And part of me feels blessed that the market is so dead right now because I'm doing the course on June 14th. Again, I'm not sharing a link with you. This was not intended to pitch the course, but it was almost to enlighten you that if you could find one thing you're good at in the market, you don't need to do anything else. Just one thing you're consistently good at, you don't need to do anything else. Everything else will be a waste of your time. Really, I promise you. Just become good at one thing and nothing else matters. Tomorrow's levels? Sure, why not? Here are the levels for tomorrow. If you thought it was magical how the spiders topped out where we called it, how Netflix topped out where we called it. Here are tomorrow's levels today. These are the levels for July 2nd. Today's July 1st. I tend to have an easy time making money when I do take these trades. And with that, ladies and gentlemen, I hope I sort of enlightened you. I know some of these talks are hard because a lot of traders don't want to listen to them. A lot of traders will say, what's the point? I want to watch this, but like, what's the point? And maybe you've given up on yourself already. Maybe you're at the point where you've given up on yourself. And I can't speak on behalf of other people who do similar things to me, similar things as me and run trading rooms. But I will say that I personally still believe in you. And I know that sounds weird or cliche, but just hear me out for 1 second. I personally believe in you because I came from a situation where I grew up with nothing. I was divorced. I was, shot at, sliced at. I went through the market. I've been through times where I felt alone, bad, you suck at everything, you're not good at anything, you're a failure. And I felt those things at one point along the road to where I was today, not just as a trader, but in life. And what I realized was it wasn't until I agreed that I deserved to be happy mentally. This is when, as they say, manure hits the fan. It wasn't until that point where I felt that I deserved to be happy that everything good in my life just started magically coming when everything was bad. And I will close this off. I will close off the message like this. I believe in you as a trader because I have seen traders come from my situation, like myself, in much worse situations and turn their lives around. And honestly, as much as I can guide you and as much as I will help you and as much as I will make this process, in my very humble opinion, as easy as possible, as humanly possible to bring you down this road, it comes down to as long as you are not giving up on yourself, no matter what you have done prior to this moment forward, whenever you decide when this moment is, whether it's now, whether it's tomorrow, if you decide that that moment is right now, you can change and you can have it better. And I promise if you continue down that road and you climb to that top, you will look back at where you were and you might be telling the same story as which I am telling you right now. I hope you guys enjoyed the Newsbeat show. Happy trading, make money. I'll see you guys tomorrow on the Newsbeat live trading broadcast. Have a wonderful evening. All right. Stop.